Let's talk about Taste Holdings, which owns National Wholesale, Jewellery, Dominos, Maxis and the Fish and Chips Co.
Right, so that's a bit of an unusual mix, but the jewellery business continues to do pretty well, and the core of the restaurant offering is in fact Dominos and Starbucks, because the Starbucks license master franchise is what they won from the global Starbucks group, and I think so far they've got 3 stores open.
And NWJ, of course, it's the franchising underpin to this entire organisation.
That was the logic of it, but clearly it's a development company. It's running through cash as it spends money on the opening of these stores.
Market cap 726 million rand, which is unusual for Paul to be holding a stake in something less than $1 billion. PE of -10. There's
so
the growth element in terms of investing in the new plays, and pays no dividends. You wouldn't expect it to pay a dividend in a growth phase. Let's look at the share price graph.
Looks a bit anemic. So it has a little spike there. That was the Starbucks announcement. But since then, I think the icy winds of the capital layout.
A bit anemic. That's spoken like a true Taste Holdings shareholder who has been seriously burnt.
Just drifting around at around R1.80.
Is this the deal of the century? Do you bet on the growth going forward?
Yeah, I mean, I think it's probably pretty binary, which, you know, 2 directions this company could go into. The reality is really kicking in hard. The amount of money they've spent, they've had to raise money from shareholders, and they've got quite a bit of debt on the balance sheet. If they pull it off, absolutely, everything's going to come through. The market's telling you there are some concerns.
Is that a big if, in your opinion?
I think it is, because I think the problem is potentially in the implementation, and it takes longer for all the Domino's store networks and the Starbucks to be as profitable as they need it to be to pay back the initial investments.
But I suspect if they needed to raise more money, they would just have a rights issue and people would follow their rights, because, you know, if you're in it, you're in it, and off you go. So I think Starbucks is big. I think it gets a lot bigger in this market. Domino's is interesting because pizza is a strong category.
Of course, the time horizon is important here.
The Domino's rollout also has been slightly disappointing because they didn't convince many of their franchisees to come along for the ride, so they've had to buy back some of those stores. It's been quite expensive. I'm told that Domino's pizzas are delicious, though.
Well, of course,
but the one in Greenside is too far away from my house. I'll go and taste them this weekend.
Let me go back to this. How exposed are we?
It's one of our smallest stakes. So it's just, we've got 1 or 2 or 3. You've got your Sibanyas, mine. We've got the Taste Holdings stake, and we've got our stake in Ascendus Health, which I would regard as sort of moonshots in the portfolio. Definitely smaller than the core holdings, but also we're going to take the same kind of long-term approach. So just stick with it.
Hot or not?
Look, it comes with a health warning. I mean, this could go horribly wrong, but, you know, if they get it right, I think there's significant upside. I'm going to back them. Unique brands, intriguing portfolio, so hot for me.
Hot, Paul, you going hot?